What's up, guys? Welcome back to Airbnb ABCs. Today, what we're going to get into is something that people ask me about a lot, and I see discussed a lot on the internet, and that is the subject of should you buy your Airbnb or VRBO properties in the name of an LLC. And we're going to talk all about the pros and cons of that and the taxation of that. But first, I would really like you guys to subscribe down below, hit the like button for me. It really helps out this channel, helps this channel grow, keeps these videos coming, and keeps that good positive feedback, to keep me engaged here. And I get this question all the time, and there was actually a specific person that asked this in the comments about putting your properties in an LLC, starting an LLC, whatever. And there are a lot of reasons why people want to do that and have that question. A lot of these things are that people just think that they need that. They've heard it so many times that they think that if they are going to start a business, an Airbnb business or whatever, that they need to have an LLC. There's also a lot of people that tell you that you need it. A lot of these are people that sell LLC stuff, but they say you have to use it. And it's a lot of people that think they needed it, did it, and now they're saying that that other people also have to do it. And then there's some people out there that just, think that it sounds cool to have an LLC, thinks that it makes them more legit. You go to your high school reunion and say, yeah, I'm the president, CEO of XYZ Properties LLC, versus being like, yeah, I got a couple rental cabins and we rent them out. Not knowing then that the people you're talking to, not knowing that, you're putting $300,000, $500,000 through these places every single year, but it sounds cooler if you say XYZ LLC. One of the things that I want to get across to you guys, and this is probably also for legal reasons and stuff, but I am not an attorney. I'm not a tax professional. This is just my experience and my opinion over the last 10 years investing in real estate, because I've been doing real estate investing for about 10 years, and then Airbnb investing for about the last 2. So if you guys have any questions about this stuff, and you don't make any legal or financial decisions based solely on what I say, but go talk to your attorney, go talk to your CPA, but always keep in mind, especially with attorneys, they are there to sell legal products, legal services. They are, that's their job, and there's nothing wrong with that. You go to a car lot, car salesman's going to try to sell you a car. You go to an insurance salesman, they're going to sell you insurance. If you have a water salesman during a flood, they're going to try to sell you water because that's what their job is. And there are, there's good things about that, but just keep in mind what it is that you're really trying to do with an LLC and why you should or shouldn't have one. So let's get into the pros and cons of having an LLC for your properties. And there, in my opinion, again, this is just my opinion and my experience, there are only a few pros for having your properties in an LLC or having a series LLC or all these other LLC products that people get their heads wrapped around. It's almost like they are more interested in the setup and the corporate entity than actually running the Airbnb business and providing good experiences for guests and such. But the biggest one is limited liability, as it says right in the thing. A limited liability company, it limits your liability. It doesn't totally absolve you of any liability. It just limits who can sue you, who can sue the company, how much assets they're able to go after, being that there is that it is a separate corporate entity that you're going to be putting these properties into, depending on how you guys initially finance and do the properties. That's another thing that we're going to get into here in just a second. But the limited liability part of that is like I said, it's very limited. And if you do something personally, you can still be held liable even if your stuff is in a limited liability company. For example, if you build a set of stairs by yourself, you are in this, you own this limited liability company. The limited liability company owns the house, but you physically did the stairs. You could still be personally liable or held to some level of liability, even if you have that limited liability company. And the biggest thing that really limits the liability of these is these single person LLCs. And I've heard that these can be pierced very easily, that the courts can sit there and say, listen, we get that you have an LLC, it's only you in it. This is obviously a corporate shell to put between you and the property. And even though, you own, the LLC owns the property, you own the LLC personally. And so, they can come after you directly. Again, guys, I'm not an attorney, and fortunately, I've never been sued. But these are all the things that I've heard, and these are the couple of pros is that they do provide you with a limited level of liability. There is also some degree of anonymity to these, and if you have concerns or fears of people knowing who you are in real life, where you live, etc., it can provide some degree to people who don't really want to do much digging. It doesn't take a lot to Google a company name, an LLC name, find out what state that company's registered in, go to the Secretary of State, find out the person's name, and then start Googling that person's name. It's not hard in this day of information to find out who the owners of that LLC are and be able to find out who they are in real life, where they live, and all sorts of other things related to ownership and anonymity. So it doesn't provide the level of anonymity that it probably did before we had all this information at our fingertips. After looking at those couple of pros for having an LLC and having your properties in an LLC, let's look at the many, many cons of having that same deal. The biggest one for me is that it is much harder to finance a property that is in the name of an LLC, if you can even do it at all. If your LLC is brand new and you want to try to close in the name of the LLC, there's a good chance that the bank is going to just say no. The reason for that is that there's no history to that LLC. There's no credit. There's no income. There's nothing. It's brand new. It'd be like trying to finance a house in the name of a newborn baby. If you can get these loans closed in the LLC, you're probably going to have to give a personal guarantee, which personally ties you to the note, ties you to the debt, and banks do this because they know what you're trying to do. You're trying to separate yourself from the debt. They're not stupid. That's why they're worth billions and trillions of dollars, because they're not stupid, and they are going to want that personal guarantee that's still going to tie you personally to that property, to that debt, etc. In addition, you're probably going to have to take a commercial loan versus a conventional loan, and the terms are usually going to be much worse. You're probably going to have to put down at least 20 to 30% versus anywhere from 10 to 15 to 20% for a conventional investment loan. You're going to probably have higher rates. Again, these come with higher risks because you may be able to walk away from the loan easier with your LLC. I don't think that you would be able to, given that it has a personal guarantee, but you're going to end up with a higher rate, a marginally higher rate, and the rates are already high. So to take an even higher rate for something that, in my opinion, doesn't give you a lot of utility, it's just another cost that you're going to have to pay. You usually have shorter terms, so your payment is going to be much higher, which is going to negatively impact your cash flow. When you go to the insurance end of things, again, it's going to be a lot of the same as the financing. The rates are going to be higher because they are insuring a company that has no history. It has no credit rating, it has no anything, and it's going to likely be a commercial policy, and those just have more stipulations to them, and anytime that you add more stipulations to anything, the price is going to be higher. Then there's the fact that LLCs themselves have more cost as far as time and money in order to maintain. You're going to have filing fees, you may have to pay an attorney to set it up, you may be able to do it online, but there's going to be filing fees no matter where you file the thing, what state you're in, etc. There's going to be annual fees. You're going to have to submit an annual report, which isn't that big of a deal for most states. Not like you actually have to do anything. It's kind of just like pay the money and we'll in the tax, and we'll give you another year on this thing. There are some things as far as like meeting requirements and operating this thing like a company. And this is going to come up if you're ever, in a legal jam with this and you're trying to hide behind this LLC. The folks that are coming after you are going to be like, well, they had this LLC, but they didn't really operate it like a company. They had no annual reports. They didn't have quarterly meetings or monthly meetings. They didn't do anything like a normal company would operate in any other environment. And so they can have that thrown out, and then they can pierce through the veil of that LLC. There's also some areas that you will have extra taxation. Just because you are an LLC, you may be subject to additional taxes that you wouldn't if you were just a sole proprietor and owned these things personally. Now, a big thing that I hear for people trying to get around all of this, as far as the financing and a lot of the insurance stuff, is having an LLC close in your personal name and then transfer that into your LLC. That's going to have a little bit of cost, but that cost is usually pretty minimal. The biggest risk that you run is triggering a due on sale clause, and that is something that is in most mortgages, where if you sell the building and a transfer would count as a sale, that that the note would be due. So if you owe $450,000, that you would have to come up with that $450,000. Now, this is a boogeyman that I've never actually heard being enforced in real life. I don't know of anyone that has had this done. I've never transferred from personal to an LLC, so I can't exactly give my personal experience on that. But with rates the way they are, and where some people got these rates, my 3 properties are 3.125, 4.375, and 6.25. If I were to take that 3.125, move it to an LLC, that would be a perfect time for that bank to say, no, it's due on sale right now, and essentially force me to refinance that into a commercial mortgage that probably has an interest rate up around 8%, and so they're not losing money on that interest rate versus our 8 or 9% rate of inflation right now, where they're losing 5 or 6% annually. When you transfer that, the next time your insurance comes up, you're not going to be insuring it in your name. Now the insurance company is going to say, well, the deed says that it's XYZ LLC's property, and we're going to have to switch you to commercial insurance, and that is going to cost you more money. And then people say to me, but Mike, I need the tax breaks. I need the tax breaks that come with running a company. So I need that LLC in order to be able to take advantage of these awesome real estate tax breaks that everyone's talking about. And the thing is that on the tax side of things, LLCs don't have any tax advantages necessarily over owning these things personally, being a sole proprietor. Again, I'm not a tax pro. But I have been in this game now for a decade or so, and so I have a lot of experience dealing with taxes with real estate. In general, LLCs are pass-through entities unless you elect to be taxed as an S or a C corp. And what that means is that all of your income, all of your expenses that you have in that LLC pass through to your personal return. So if you make $100,000 in your W-2 and you make, let's say, $50,000 in with your short-term rentals, that $50,000 will pass through that LLC to your personal return. You'll have made $150,000 if you have, $24,000 worth of expenses with your LLC. That'll pass through to your personal return, and you'll only be taxed on $125,000 of that. If I think it was 25 or 24,000. In any case, it passes through to your personal return. And so when you look at just LLC with pass-through taxation versus sole proprietor, the tax implications are the same. Even if you have multiple people, if let's say you and your parents want to go in on a short-term rental for you, all that would do with that LLC is just split that pass-through income to whatever you guys have agreed on. In our case with our partnership, it's 50-50, and that passes through to each person on their respective basis on a percentage basis. And so the thing is that then people ask me, like, what do I do? So if I don't use LLCs, and we do have an LLC that we have had because we thought we needed one back in the day, but we have put all of our Airbnb rental properties in our personal names. We do sole proprietorship type of stuff. What do? Well, I look at what I really want that LLC for, and that is for the liability protection. So instead of coming up with this big legal masterpiece that people put together, I go after just liability insurance. The thing is each one of our properties in our building insurance, our hazard insurance, we have $500,000 of liability coverage on each property policy, plus personal injury protection, plus medical payments, and all the stuff that normally goes along with property insurance. Airbnb and VRBO also offer $1 million of liability insurance for any stays. That's every stay has $1 million of liability insurance. And that's one reason why I have not started doing direct booking websites, because then I would have to come up with some other insurance in order for us to make up the same thing that Airbnb provides for us. And that is a lot of reasons why there are these platform fees, so that they can provide this insurance to us, so they can provide air cover through Airbnb Airbnb, etc. I also have a $1 million umbrella policy, and that protects everything I do, and that only costs like $100 a year. So umbrella insurance is extremely cheap, and actually now that we've brought this third rental online, I just kind of jogged my memory. I want to go ahead and upgrade that to $1.5 or $2 million of additional liability insurance. And the thing is that if someone would sue you, in the unfortunate event that would happen, they're probably going to go after the most low-hanging fruit that they can. So if I can just dangle all of this low-hanging fruit in the form of liability insurance, they can go after that. That is what I am looking for in protection with a legal entity. So I just go ahead and stock up on insurance because that is something easy that the insurance companies will fight on my behalf. And if it did end up having to pay, there are several $1 million worth of liability policies ready to go. And so the last question to be asked is, when would I end up using an LLC? And the biggest thing that I would use an LLC for is for partnerships with non-family members involved in it. And I know that the adage out there is don't mix business and family. And I guess I sort of kind of have a mafia type of style to my thinking, is that, if family is who I can trust the most. Maybe some of you guys don't have that out there, and I'm sorry if that's the case. But for me, my family is who I can trust in an absolute fashion, that they're not going to walk away from me, that they're not going to have any types of things going on. And if I cannot invest with my family, I'm probably not going to make that partnership. And that's just on me. That's the way I feel, and that's the way I think. So I would use an LLC if I was going to make a partnership that involved a non-family member being a partner. Not necessarily an investor, because people can invest and not be partners. But as far as partnerships go, non-family members, probably going to put that in an LLC. If I was super wealthy and I didn't care about all the extra costs, and I wanted that, little bit more of liability protection, that little bit more of anonymity, I would probably go ahead and use an LLC. And if I was not using financing, if I was not using leverage, which I do, even if I would have the money to go ahead and purchase one of these in cash, I'm always going to use leverage to be able to enhance my returns, to be able to acquire more properties. But if I did have a property in cash, or I had a property that ended up being paid off that I didn't refinance, I may think about putting that into an LLC. So guys, I want you to keep in mind, not an attorney, not a tax professional. So you guys, if you're thinking about these things, go talk to those folks, go talk to a couple of them so that you get a good idea about what's out there and a couple different professionals' opinions. I would like you guys to click on the videos that are on the screen right now that tells you about all the properties that we have, how we self-manage them from a distance, the things that we do to get them ready, everything about our Airbnb, VRBO, short-term rental business. Hit the like button for me. That really helps out this video. Hit the subscribe button to help out this channel, help us grow. I appreciate you watching all the way to the end of this. I am sure it will probably be 10, 12-minute video. If you're still here, comment down below. I appreciate you guys watching. I'll see you.